Good afternoon, traders. This is Michael and Paul coming to you from GammaEdge on Sunday, April 10th, Masters Sunday. We're going to go ahead and do a quick overview of the market model timing, and kind of what we're seeing as a long-short thesis in the market. So go ahead and take it away, Paul.
Thanks, Mike. So pause it here, read this, internalize it, don't proceed if you don't agree. Taking a look at the 1 week sector here. Mike, you want to comment? You want me to?
Yeah, I'll go ahead and take it away, Paul. So basically what we're seeing, obviously, you can see the XLV, XLE, and XLP, and actually even the XLU have been leading. This is a 1 week sector review performance. Again, those are all completely defensive sectors. Nothing in this sector review here says anything about doing a risk-on environment. So I think we all should proceed with caution, manage our risk in the coming weeks. Paul's been doing a good job on the morning call, kind of weeding through the overall market and kind of telling us where it is and where it's been. If you review the SPY, IWM, and QQQ wing charts every morning, or even this weekend, if you take a quick glance, they are all decidedly bearish, with the puts extremely outweighing the calls on that front. So go ahead and take a look at those. So go ahead and take it away, Paul. We'll go ahead and talk about the tick.
Sure. Thanks, Mike. We've had a lot of questions come in over the week from the Discord, and people wanting to go long or people wanting to go short, and we're really on kind of both sides of the coin here. Just to give you the preview, we are not bullish and we're not fully bearish, but we're more bearish, and here's why. So first of all, across the top, 52-week new high, new lows, and we just can't seem to get an advance that is broad in participation. When you have the red line over the green line and a negative yellow line, which is the difference of these two, it just tells you the market's not participating. So we're seeing a few leading stocks take off, but it's not broad. And unless you are really good at picking stocks, you're going to get chewed up. There's just no way around it. This is the Tick US Composite. The cumulative tick here broke through. If this is Friday, Thursday, Wednesday, it broke through after warning on late Tuesday. We got a continuation, and we haven't been able to advance back out of this. Red is above the blue here. What that typically means is that we have been in a short-term uptrend, but we've lost it. And until we can get this white line above, you're going to see these continuing to converge on each other. It's a warning sign, folks. Don't go long. There's nothing here that says go long in the Tick US Composite. So let's take a look at the next one. This is the ARCX. The ARCX is really important, and if you're not watching it, you should. The cumulative tick here is comprised of the NYSE, the NYSE, the NASDAQ, and then the American Stock Exchange. And for those of you who are familiar, the Amex also contains your ETFs and all your option transactions, or a large percentage of them. You can see if this is Friday, Thursday, Wednesday, Tuesday, we had a failure to advance. Tuesday broke through. Cyan is on top of the red. This is a bearish model. We had the failure confirmation on Wednesday. We were already linear down. Very, very poor performance, continuation down. We did get a reversal on Thursday, and we're trying to get up, but you can see into the weekend, risk off just isn't there. Again, nothing here says go long. When we take a look at the Russell 2000, this is the IWM here. The Russell 2000 is the small caps. And you can see, again, cyan over red, long-term downtrend on small caps. And you can see the cumulative tick is just making new lows. Thursday it made a new low. It's attempting to rally. We'll see where it goes. But again, long-term downtrend. We've got to get above that cyan line. We've got to get these to revert. We're nowhere near this, right? So again, risk off, go to the short side, short the bounces, that type of thing. Contrasting, we've got the S&P 500 composite model. You can see red over cyan. This is actually in a longer term uptrend. And you can see that over the week, It was noisy, back and forth, back and forth. Thursday, it tried to rally up. It did so, finished the day well, above what we call the short-term moving averages. And you can see Friday into the close, it sold off. But we really didn't progress over the 11:30, the European close type of time frame. Again, telling us, be careful, right? It is an overall bullish model, but it's isolated only to the leading stocks that comprise the S&P 500. And then finally, when we take a look at the NASDAQ, again, long-term uptrend, red over cyan, excuse me. But you can see we've had this failure across last week. We did reverse on Thursday. That's good. And we failed on Friday. Horizontal on the NASDAQ, on the technology. We really need this to start continuing up. But you can see what the Qs did in general with this action here. It just kept falling and has been sideways more or less since Wednesday. So when we, as we wrap things up, our stance going into this week, and I'll talk more about it tomorrow with the summary on the morning call. I think Mike and I both think, don't get out over your skis. I think there are some opportunities to play to the upside, but you've got to be really, really good. Shorten your time horizon. Time matters right now. And you can see there's a mixed picture in the market model. This is not the time to go long. It's also not the time to go heavily short either. Mike, anything you want to add to help the folks out there?
No, I think that also incorporates into your day trading also. I think you really need to watch the tick intraday. We've got a couple, quick bounces. I think we had one, Tuesday or Wednesday off a key gamma level that you had pointed out in the trajectories for the morning call. Quick run back up to that 450. Some people played it to the long side, but just, again, back and forth kind of indecision. So I think that's important for everybody to kind of watch the tick. So, Paul, quick question. What would you like to see, I guess, overall for a long type of stance
Sure.
in your morning call review and everything else?
Yeah, so our primary one that we use is this one right here. This is the TIKUS Composite, and I'd like to see the broad TIKUS Composite, which we affectionately call the trash can inside the Discord. I'd like to see this resume its uptrend. We're not there. And so until we do, I'm not going long. If we get a solid break to the downside, I'll probably play the downside. But until we break above this the ribbon, I'm not going long, not in any size whatsoever. Very opportunistic, very short term, probably intraday scalping.
Totally agree. Great overview there. So, okay, great. Thanks, traders, for joining us here on Sunday. Make sure to look for Paul's morning call every morning as he does an overview of what he sees on the gamma side and gives trajectories for the week. And go ahead and like and subscribe if you're watching this on YouTube. And you can follow us at GammaEdges with an S on Twitter. Anything else you want to finish with, Paul?
Nope, we're in great shape. Make it a great Sunday, folks.
All right. Thanks, traders.